Based on the provided data, the trend for Bitcoin appears to be bearish in the short term. The price has been consistently declining over the past 2 weeks, with the support level of $86,000 holding strong. The forecast data suggests a continuation of this downward trend in the coming week. Therefore, a suitable strategy would be to take a short position on Bitcoin. A potential entry price would be around $87,000, with a stop-loss order placed at $88,000 to limit potential losses. The target price could be set at $84,000, aiming to capitalize on the anticipated price decline. The RSI indicator is currently in oversold territory, suggesting potential for a short-term bounce, but the overall bearish trend and the price action within the Bollinger Bands, which shows the price trading below the middle band, support the short position. Based on the historical and forecast data, Bitcoin Cash appears to be in an upward trend. The price has been steadily increasing over the past 2 weeks, and the forecast suggests continued growth. The support level of $311 provides a strong foundation for this bullish outlook. A buy position could be initiated at the current price of $320, with a stop-loss order placed at $311 to limit potential losses. The initial target price could be set at $360, which aligns with the forecast and represents a reasonable profit margin. Furthermore, the RSI indicator suggests that Bitcoin Cash is not currently overbought. While it has risen above $40, it remains below $80, indicating room for further upward momentum. The Bollinger Bands are also supportive of this strategy, as the price is currently trading above the lower band and approaching the upper band, suggesting a potential breakout. By combining these technical indicators with the overall trend analysis, a well-defined strategy emerges with a clear entry, stop-loss, and target price. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI is hovering around the oversold level, indicating potential for a short-term bounce, but the overall bearish sentiment persists. Therefore, a short position is recommended. Enter a short position at the market price when STRK breaches the resistance level of 78 cents dollars. Set a stop-loss order at 81 cents dollars to limit potential losses. The target price is 65 cents dollars, based on the projected downtrend and support level of $0.703. This strategy combines the bearish trend, oversold RSI, and potential support level break to maximize profit potential while managing risk. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline over the 2-week period, with the price breaking below key support levels. The forecast data also suggests continued downward pressure. Given this trend, a short position is recommended. A suitable entry price for a short position would be around $2,170, as this level represents a recent swing high and a potential area of resistance. The stop-loss order should be placed above the recent swing high at $2,240 to limit potential losses. The target price for this trade could be $1,960, which aligns with the forecast data and the lower Bollinger Band. The RSI indicator is currently below $30, suggesting oversold conditions, which could provide additional support for the short position. Based on the provided historical and forecast data, XRP appears to be in a sideways trend with a slight bearish bias. The price has been fluctuating within a range, with support around $2.58 and resistance around $2.74. The forecast data suggests a potential pullback towards the support level. Therefore, a cautious approach is recommended. A potential entry strategy could be to wait for a price dip towards the support level of $2.58. A stop-loss order should be placed below the recent swing low, around $2.15, to limit potential losses. The initial target price could be set at the resistance level of $2.74, aiming for a profit of approximately 6%. This strategy utilizes both the support and resistance levels as well as a risk management approach with a stop-loss order. Based on the provided data, Binance Coin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices suggest this trend will continue. The support price of $574 acts as a potential floor, while the resistance at $682 has been consistently holding strong, preventing significant upward movement. Given this downtrend, a bearish strategy is recommended. A suitable entry point would be around $588, the predicted price for March 7th. The stop loss should be placed above the recent swing high at $607 to limit potential losses. The target price could be set at $557, which represents the bottom of the Bollinger Bands and a significant support level. This strategy utilizes the downtrend and support levels to capitalize on potential further price decline. Based on the provided data, Stellar appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.291 on several occasions. The forecast data also suggests a continued downward trajectory. Considering these factors, a bearish strategy is recommended. A potential entry point for a short position could be around $0.295, near the recent support level. A stop-loss order should be placed at $0.305, above the recent high and the upper Bollinger Band, to limit potential losses. The target price could be set at $0.258, based on the forecast data and the lower Bollinger Band. This strategy utilizes the downtrend, support and resistance levels, and the forecast data to identify a potential entry and exit point for a short position. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, supported by the falling RSI and the price consistently trading below the Bollinger Band center. The forecast data further strengthens this bearish outlook, predicting a continued decline in price over the next week. Therefore, a short position strategy is recommended. Enter a short position at the market price on March 7, $2,025. Set a stop-loss order at $3.05, above the recent support level and the forecast low. Aim for a target price of $2.75, based on the predicted price movement and the support level identified. This strategy aims to capitalize on the anticipated downtrend while managing risk with a defined stop-loss. Based on the provided data, Cardano appears to be in a volatile uptrend. While the historical data shows some dips, the overall trend is upwards, especially when considering the forecast prices. The RSI suggests the asset is currently in a neutral zone, not oversold or overbought. The Bollinger Bands show a widening range, indicating increased volatility. Given these factors, a potential entry strategy could be to buy Cardano around $0.800, aiming for a target price of $0.900. A stop-loss order should be placed at $0.780 to limit potential losses. While the RSI strategy and Bollinger Band strategy don't provide clear buy signals at this time, the overall trend and forecast prices suggest a bullish outlook. Combining this with the entry, stop-loss, and target prices outlined above creates a balanced strategy for potential high returns. Remember, this is a suggestion based on limited data and market conditions can change rapidly. Conduct thorough research and consider your risk tolerance before making any investment decisions. Based on the provided data, Litecoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $98.50 on several occasions. The forecast data further reinforces this downtrend, predicting a continued decline in price over the next week. Considering these factors, a bearish strategy is recommended. A suitable entry point for a short position would be around $103, with a stop-loss order placed at $109 to limit potential losses. The target price for this trade could be set at $94.50, based on the forecast data. This strategy leverages the downtrend and the RSI, which is currently in the oversold region, suggesting a potential for further price decline. Based on the provided data, a potential investment strategy for Swaycoin involves identifying a bullish reversal pattern. The historical data shows a downtrend followed by a potential bounce back, with the price hovering around the support level of $2.52. The forecast data also suggests a possible bottoming out around this price level. A long position could be initiated if the price breaks above the resistance level of $2.79, with an entry price set at $2.80. The stop-loss order should be placed below the recent swing low at $2.52 to limit potential losses. The target price could be set at $3.16, based on the recent high and the upward trend indicated by the RSI and Bollinger Bands. This strategy utilizes a combination of support and resistance levels, price action, and technical indicators to identify a potentially profitable trading opportunity. Remember to manage risk effectively and adjust the strategy based on market conditions. Based on the provided data, Aptos appears to be in a sideways trend with periods of slight upward and downward movement. The support level at $5.81 provides a potential buying opportunity, while the resistance level of $6.30 may act as a ceiling for upward price action. A long position could be initiated when the price bounces off the support level and shows signs of upward momentum. A stop-loss order should be placed below the support level at $5.75 to limit potential losses. The target price could be set at the resistance level of $6.30, aiming for a profit of approximately 7%. Furthermore, the RSI indicator suggests that the asset is not currently overbought or oversold. The Bollinger Bands show that the price is trading within the bands, indicating a period of consolidation. The forecast data predicts a slight downward trend in the coming week, which aligns with the sideways trend observed in the historical data. Therefore, a cautious approach is recommended, with a focus on managing risk and capitalizing on potential short-term opportunities within the established trading range. Based on the provided data, SE appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.223 on several occasions. The forecast data also suggests a continuation of this downward trend. Considering these factors, a bearish position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $0.223. Set a stop-loss order at $0.227 to limit potential losses. The target price for this trade is $0.212, based on the forecast data and the downtrend. This strategy utilizes the trend analysis and the RSI indicator to identify potential entry and exit points. Based on the provided data, Ethereum Classic appears to be in a short-term downtrend. The historical price data shows a general decline over the past 2 weeks, with the price bouncing around the support level of $19.70. The forecast data also suggests a continued decline in price over the next week. A potential strategy could involve entering a short position when the price reaches the resistance level of $20.20. The stop-loss order should be placed above the recent high, around $20.50, to limit potential losses. The target price could be set at the support level of $19.70, with a potential for further downside movement towards the lower Bollinger Band. This strategy utilizes both the price action and the technical indicators to identify potential entry and exit points. Remember to adjust position sizing and risk management based on your individual trading style and risk tolerance. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.249. The forecast data further reinforces this downtrend, predicting a continued decline in price for the next week. Given this downward momentum, a short position strategy is recommended. Enter a short position at the market price when the price touches the resistance level of $0.268. Set a stop-loss order at $0.274 to limit potential losses. The initial target price for this trade is $0.243, which aligns with the first forecast price. Monitor the price action closely and adjust the stop-loss or target price as needed based on market conditions. Consider taking profits in stages as the price moves towards the target. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.132 on multiple occasions. The forecast data also predicts a further decline in the coming week. Considering these factors, a short position is recommended. Enter a short position at the market price when the price touches the resistance level of 15 cents dollars. Set the stop-loss order at $0.155 to limit potential losses. The target price for this trade is 12 cents dollars, based on the forecast data and the downtrend. Monitor the RSI indicator closely. If it falls below $20, it could signal an oversold condition and a potential short-term bounce. However, maintain the overall bearish outlook and exit the position if the price rises above the stop-loss level. Based on the provided data, optimism appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping below the support level of $0.941. The forecast data also predicts a continued decline in price for the next week. Therefore, a bearish strategy is recommended. A good entry point would be around $0.989, the recent support level. The stop-loss price should be set at 95 cents dollars to limit potential losses. The target price could be $0.866, based on the forecast data. The RSI indicator is currently hovering around $40, suggesting that the asset is not oversold. However, the Bollinger Bands indicate that the price is close to the lower band, suggesting a potential bounce. This strategy combines the bearish trend with the potential for a short-term bounce, aiming to capitalize on both scenarios. Based on the provided historical and forecast data for STRK, a potential downtrend is observed. The price has been declining over the past 2 weeks, with a forecast projecting further downward movement in the coming week. The RSI indicator, currently at $35.40, suggests that the asset is not oversold, but it is hovering near the oversold level of $20. This, combined with the downward trend, indicates a potential for further decline. Therefore, a short position could be considered. The entry price would be around $0.187, the stop-loss price would be set at $0.198, the recent resistance level, and the target price would be $0.150, based on the forecast data. This strategy aims to capitalize on the potential downtrend while managing risk through a defined stop-loss order. It's important to note that this is just a potential strategy and should be carefully evaluated before implementation. Remember to consider your risk tolerance and overall investment goals. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline from February 21 to March 6, with the price breaking below the support level of $141. The forecast data for the following week further suggests a continuation of this downtrend. Therefore, a bearish strategy is recommended. We will enter a short position at the opening price on March 7, with a stop-loss order placed at $141, the support level. This will limit potential losses if the price unexpectedly rebounds. The target price for this trade is $117, which is based on the forecast data and the downtrend. The RSI indicator also supports this strategy, as it is currently below $30, indicating oversold conditions. Additionally, the price is approaching the lower band of the Bollinger Bands, suggesting a potential further decline. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $0.481 on several occasions. The forecast data further reinforces this bearish outlook, predicting continued price declines for the next week. Therefore, a bearish strategy is recommended. Enter a short position at $0.628, the first forecast price. Set a stop-loss order at $0.644, slightly above the entry price, to limit potential losses. The target price should be set at $0.508, based on the forecast data, representing a potential profit of 19%. This strategy leverages the perceived downtrend and utilizes the forecast data to guide the entry and exit points. Based on the provided historical and forecast data, Render appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. The support level at $3.53 provides a potential buying opportunity, but the resistance level at $4.14 suggests limited upside potential. Therefore, a conservative strategy could involve entering a long position at the support level of $3.53 with a stop-loss order placed at $3.45 to limit potential losses. The target price could be set at $3.85, representing a potential upside of 8.5%. This strategy takes advantage of the potential for a bounce from the support level while managing risk with a tight stop-loss order. Based on the provided data, Solana name service appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding around $0.116. The forecast data suggests this downtrend may continue, with prices predicted to fall below 10 cents in the coming week. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the RSI falls below $30, which is a sign of oversold conditions. Set a stop-loss order at $0.116, the recent support level, to limit potential losses. Target a profit of $0.0979, the predicted low for March 7th. This strategy combines the bearish trend, oversold RSI, and price forecast to create a potentially profitable short position. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast predicts further downward movement. The RSI is hovering around oversold levels, suggesting potential for a short-term rebound, but the overall trend remains bearish. Therefore, a short position could be considered. Enter a short position at the market price around $0.205, with a stop-loss order placed at $0.215 to limit potential losses. The target price for this trade is 18 cents, aiming to capitalize on the predicted downtrend. This strategy combines the bearish trend analysis with the oversold RSI condition, aiming for a short-term profit. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI, while currently hovering around $35, has been consistently below $50, indicating bearish sentiment. The Bollinger Bands are also contracting, suggesting a potential for a further price drop. Therefore, a bearish strategy is recommended. Enter a short position at the market price, around $0.00000680. Set a stop-loss order at $0.00000720 to limit potential losses. Target the first price target at $0.00000620, aligning with the projected low for the week. If this target is reached, consider trailing your stop-loss to $0.00000620 and aiming for a secondary target at $0.00000570, based on the forecast. Remember, this is a high-risk strategy and should be approached with caution. Based on the provided data, SHIB appears to be in a downtrend. The historical price data shows a consistent decline, with the price trading below the resistance level of $0.00000137 for most of the period. The forecast data also suggests a continuation of this downtrend, with prices predicted to fall below the current support level of $0.00000129. Given this bearish outlook, a short position strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.00000137, the resistance level. This stop-loss will limit potential losses if the price unexpectedly reverses and moves higher. Set a target price of $0.00000119, which is a key support level in the forecast data. This target price represents a potential profit of approximately 10% based on the current market price. Monitor the RSI indicator closely. If it falls below $20, it could signal an oversold condition and potentially increase the likelihood of a further price decline. However, caution should be exercised as the Bollinger Bands are currently contracting, suggesting a period of consolidation before a potential breakout. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data further supports this trend. The RSI indicator is consistently below $50, indicating bearish sentiment. The Bollinger Bands are also narrowing, suggesting a potential breakout in either direction, but the overall trend is down. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price touches the upper Bollinger Band. Set a stop-loss order at the next higher high to limit potential losses. Target a profit at the lower Bollinger Band or a significant support level identified in the future. Remember, this is a high-risk strategy and should be approached with caution. Always conduct thorough research and consider your risk tolerance before making any investment decisions. Based on the provided data, Doge-Coin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast suggesting further downward movement. The RSI indicator also supports this view, as it has been mostly below $50, indicating bearish sentiment. A potential entry point could be around $0.00255, the lower end of the predicted range. A stop-loss order should be placed at $0.0025 to limit potential losses. The target price could be set at $0.0022, aligning with the predicted trend. This strategy utilizes the downtrend and RSI indicator to identify a potential entry and exit point. Based on the provided data, Near Protocol appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations within a range, with support around $3.01 and resistance at $3.20. The RSI oscillates between $35.80 and $51.40, suggesting a lack of strong momentum in either direction. The Bollinger Bands are relatively tight, indicating low volatility. Considering these factors, a conservative approach is recommended. A potential strategy could involve entering a long position when the price breaks above the resistance level of $3.20, with a stop-loss order placed below the recent low of $2.82. The target price could be set at $3.50, based on the previous resistance level. Alternatively, a short position could be considered if the price falls below the support level of $3.01, with a stop-loss order above the recent high of $3.51 and a target price of $2.80. Based on the provided historical and forecast data, Internet Computer appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast indicates further downward movement in the coming week. The support price of $6.04 is a key level to watch, as a break below this level could signal a further acceleration of the downtrend. A long position could be considered if the price rebounds from the support level and shows signs of reversal. An entry price $6.10 could be considered with a stop-loss order placed at $6.04 to limit potential losses. The target price could be set at $6.35, which represents the recent resistance level. This strategy utilizes the support level as a potential entry point and aims to capitalize on a potential rebound in price. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator also supports this downtrend, with values consistently below $50. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction. However, given the overall trend, a breakout downward seems more likely. Therefore, a bearish strategy is recommended. Enter a short position at the market price, around $11.90, with a stop-loss order placed above the recent high of $12.10. The target price could be set at the next significant support level, around $10.50. This strategy leverages the downtrend and the potential for a breakout downwards, while mitigating risk with a tight stop-loss order. Based on the provided data, BTC appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicator is consistently below $50, indicating bearish momentum. The Bollinger Bands are also narrowing, suggesting a potential for a break in either direction. Considering these factors, a short position is recommended. A suitable entry price for a short position would be around $301, which is near the recent resistance level and the upper band of the Bollinger Bands. The stop-loss order should be placed at $318, slightly above the recent high and the resistance level, to limit potential losses. The target price could be set at $246, which is the strong support level identified in the data. This strategy aims to capitalize on the downtrend and the potential for a break below the support level. Based on the provided data, THETA network appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding around $1.03. The forecast data suggests this downtrend may continue, with prices potentially dropping below $1 in the coming week. Considering this, a bearish strategy could be employed. A potential entry point would be at $1.04, the predicted price for March 7th. A stop-loss order should be placed at $1.07 to limit potential losses. The target price could be set at $0.977, the predicted price for March 9th, representing a significant downside move. This strategy leverages the downtrend and the predicted price movement. Based on the provided data, WorldCoin appears to be in a downtrend. The price has been declining over the past 2 weeks, and the forecast suggests further decline in the coming week. The RSI is currently below $50, indicating bearish sentiment, and the price is trading below its $200 day moving average. A good entry point for a short position could be around $0.988, the recent low. The stop-loss should be placed above the recent high at $1.06, and the target price could be set at $0.809, the lowest forecast price. In addition to the trend analysis, the RSI strategy suggests a short position. The RSI is currently at $35.90, which is below the oversold level of $20. This indicates that the price may be oversold and due for a rebound. However, given the overall downtrend, a short position is still favored. Finally, the Bollinger Bands indicate potential for further downside. The price is currently trading close to the lower Bollinger Band, suggesting a potential breakout to the downside. Therefore, the combination of trend analysis, RSI, and Bollinger Bands all point towards a short position on WorldCoin. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data indicating further downward movement in the coming week. The RSI, while fluctuating, remains below $50, suggesting bearish sentiment. Considering this, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at 22 cents, above the recent high. The target price for this trade is 14 cents, based on the projected decline in the forecast data. This strategy leverages the downtrend identified in the price data and the bearish RSI signal. It aims to capitalize on the potential for further price decline while mitigating risk with a well-defined stop-loss order. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below key support levels. The forecast data also suggests a continuation of this downtrend, with prices expected to remain below the current support level. Considering these factors, a short position strategy is recommended. A potential entry price would be around 62 cents, which is near the recent support level. The stop-loss order should be placed above the recent swing high at 65 cents to minimize potential losses. The target price could be set at 58 cents, which represents a significant support level based on the historical data. This strategy utilizes the downtrend and support levels to potentially generate profits from a short position in Artificial Superintelligence Alliance. Based on the provided data, Polkadot appears to be in a downtrend. The historical price action shows a consistent decline, supported by the forecast data predicting further drops. The RSI, while oscillating, generally remains below $50, indicating bearish sentiment. The Bollinger Bands are also contracting, suggesting a potential for a further price break. A strategy based on these observations would involve shorting Polkadot. A potential entry price could be around $4.45, the predicted price for March 7th. The stop loss could be set at $4.51, the resistance level, to limit potential losses. The target price could be set at $4.05, the predicted price for March 9th, based on the forecast data. This strategy capitalizes on the downtrend and uses technical indicators to identify potential entry and exit points. Based on the provided data, Filecoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast data indicating further downward movement. The RSI, hovering around $40, suggests the asset is not oversold, but not significantly overbought either. The Bollinger Bands show a narrowing range, indicating a potential for a breakout in either direction. Given this analysis, a conservative strategy would be to wait for a potential bullish breakout above the resistance level of $3.23. Entry could be triggered at $3.25, with a stop loss placed at $3.18 to manage risk. The target price could be set at $3.45, aiming for a $6% return. This strategy leverages the potential for a bullish reversal while mitigating downside risk. Based on the provided data, Conflux appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.0986 on several occasions. The forecast data also suggests a continued downward movement. Therefore, a bearish strategy is recommended. Enter a short position when the price reaches $0.102. Set a stop-loss order at $0.107 to limit potential losses. The target price for this trade is $0.095, based on the support level and the downtrend. This strategy leverages the RSI and Bollinger Bands indicators, aiming to capitalize on the potential for further price decline. Based on the historical data and forecast, Ethereum name service shows a downtrend with potential for further decline. The support level at $20.20 appears strong, acting as a potential bounce point. However, the forecast prices suggest continued downward pressure. Therefore, a short position strategy is recommended. Enter a short position at the market price around $20.70, the price on March 7th. Set a stop-loss order at $21.10, the highest price in the forecast period, to limit potential losses. The initial target price is $18.10, based on the forecast price for March 9th, representing a significant downside potential. The RSI indicator, currently at $36.60, is not oversold, suggesting further downside potential. However, the Bollinger Bands show a narrowing range, indicating a potential breakout in either direction. Considering the overall downtrend and forecast, a short position based on the market price, stop loss at $21.10, and target price at $18.10 offers the most efficient risk-reward profile. This strategy leverages the potential for continued downside movement while managing risk through a well-defined stop-loss order. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI indicator also supports this bearish sentiment, with values hovering below the overbought level of $80 and indicating potential oversold conditions. A long position should be avoided. Given these factors, a short position strategy is recommended. A suitable entry price would be around $21, with a stop-loss order placed at $21.90 to limit potential losses. The target price could be set at $18, based on the forecast data and the downtrend. This strategy capitalizes on the anticipated price decline while managing risk through a defined stop-loss level. Based on the provided data, a potential investment strategy for Bitcoin could involve a long position. The historical price trend shows a slight downtrend, but the forecast suggests a potential rebound in the coming week. The RSI indicator fluctuates around the neutral level, indicating a lack of strong momentum in either direction. However, the price is currently approaching the support level of $0.0268, suggesting a potential buying opportunity. A long position could be initiated at the entry price of $0.0268, with a stop-loss order placed at $0.0255 to limit potential losses. The target price could be set at $0.0317, which represents the recent resistance level and aligns with the forecast's projected rebound. This strategy aims to capitalize on a potential short-term price increase while managing risk through a defined stop-loss. Based on the provided data, PENDLE appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The RSI indicator is hovering around oversold levels, indicating potential for a bounce, but the overall trend remains bearish. Therefore, a short position is recommended. A suitable entry price would be around $2.52, the support level on March 06, 2025. The stop-loss order should be placed at $2.75, the resistance level. The target price could be set at $2.20, a significant support level identified in the historical data. This strategy leverages the downtrend and the oversold RSI, aiming for a profit from the expected price decline. Based on the provided historical and forecast data, the sandbox appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support level at $0.301 has been tested multiple times and holds, suggesting a potential buying opportunity. A long position could be initiated at the support level of $0.301 with a stop-loss order placed at $0.292, the lowest forecast price. The target price could be set at $0.358, the recent resistance level. This strategy utilizes the support level as a potential entry point and the forecast data to determine the stop-loss and target prices. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline over the 2-week period, with the price closing below the previous day's close on several occasions. The forecast data further reinforces this downtrend, predicting a continued decline in price over the next week. The support price of $0.271 acts as a potential floor for the price, while the resistance price of $0.285 presents an obstacle for upward movement. Considering these factors, a short position strategy could be implemented. Enter a short position at the market price when the price touches the resistance level of $0.285. Set a stop-loss order at $0.291 to limit potential losses. The target price for this trade is $0.254, based on the forecast data and the overall downtrend. This strategy leverages the potential for further price decline and aims to capitalize on the identified trend. Based on the provided data, ENG coin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. Support and resistance levels are not clearly defined in the given data, making it difficult to rely on traditional support and resistance-based strategies. Therefore, a strategy based on the RSI and Bollinger Band seems more suitable. We can enter a short position when the RSI falls below $30, indicating oversold conditions, and the price touches the lower Bollinger Band. The stop-loss order should be placed slightly above the recent swing high, limiting potential losses. The target price can be set at the next significant support level, which is not readily apparent from the provided data and would require further analysis. Based on the provided historical and forecast data, Uniswap appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement in the coming week. The support price of $7.06 provides a potential floor for the price, while the resistance price of $8.99 suggests an area where upward momentum might be limited. Considering the RSI, which is currently hovering around $30, Uniswap is showing signs of being oversold. We can initiate a long position when the price rebounds from the support level of $7.06. A stop-loss order should be placed at $6.95 to limit potential losses. The target price for this trade could be set at $8.20, representing a potential upside of approximately 16%. This strategy leverages the potential for a bounce from oversold conditions while managing risk with a tight stop-loss. Based on the provided data, Chainlink appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding at around $14.40. Looking at the forecast data, the price is expected to continue to decline in the coming week. Considering this trend, a short position could be considered. A potential entry price would be around $15, with a stop-loss placed at $15.30 to limit potential losses. The target price could be set at $14.40, which represents the support level and a potential reversal point. This strategy utilizes the downtrend and the support level as a basis for entry and exit. Remember that this is just a suggestion, and further research and analysis are always recommended before making any investment decisions. Based on the historical data and forecast, Aave appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast also indicating further downward movement. The support level at $180 provides a potential buying opportunity. A strategy based on the RSI indicator suggests entering a long position when the RSI falls below $20, indicating an oversold condition. The stop-loss should be placed below the recent swing low, aiming for a risk-reward ratio of at least $1, $2. The target price could be set at the next resistance level, which is $242. Additionally, using the Bollinger Bands, we can identify potential buy signals when the price bounces off the lower band. A combined strategy incorporating these 3 approaches, with a focus on the RSI and Bollinger Band signals, could offer a more robust approach to trading Aave. Based on the provided historical and forecast data, EOS appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $0.535 provides a potential entry point for a short position. A stop-loss order should be placed above the recent high of $0.644 to limit potential losses. The target price could be set at the next support level, which is around $0.475, based on the forecast data. Additionally, the RSI indicator is currently hovering around $40, suggesting that the asset is not oversold. However, if the price breaks below the support level and the RSI falls below $30, it could signal a stronger downtrend and a potential opportunity to further increase the position size. The Bollinger Bands are also indicating a potential for further downside movement as the price is trading closer to the lower band. Based on the provided historical and forecast data for Tron, a potential investment strategy could involve a long position. The trend appears to be slightly bullish, with prices fluctuating around the $0.235 support level. The RSI, hovering around $48, suggests that the asset is not overbought or oversold, indicating potential for further upward movement. A long entry could be initiated at $0.237, with a stop-loss placed at $0.222, the recent support level, to limit potential losses. The target price could be set at $0.247, aiming to capture a potential breakout above the resistance level. This strategy utilizes both the price trend and RSI to identify a potential entry point. Based on the provided data, Suncoin appears to be in a short-term downtrend. The historical price action shows a consistent decline over the past 2 weeks, with the price dipping below the support level of $0.0168 several times. The forecast data suggests this downtrend may continue, with prices projected to remain below $0.017 for the next week. Considering this, a potential strategy could involve entering a short position when the price reaches $0.0174, the highest predicted price in the forecast. A stop-loss order should be placed at $0.0178, the resistance level, to limit potential losses. The target price could be set at $0.0168, the support level, aiming for a profit of approximately $4%. This strategy utilizes both the trend analysis and the support/resistance levels to identify a potential entry and exit point.